welcome back to the Cannabis Investing Podcast. Welcome also to CEO Interviews, which is our new show. It's great to have you. You're our first 4P guest on the Cannabis Investing Podcast, which is very exciting. So thank you, as always, for taking the time and joining us.
Well, we love when you invite us and get to spend this time together.
It's our pleasure, and it's great to have you, as always. So, you know, as we were catching up a little bit now before we hit record, I was telling you that one of the thoughts that kept coming up when I was reading back our previous interviews was everything that you've mentioned has come to pass in terms of your plans for AYR, and what you were always talking about has pretty much come to fruition. So I guess if you want to catch listeners up on where you see AYR right now and kind of what you're thinking about as these days unfold, as the US picture is ever evolving and, you know, kind of ever more bullish and yet not lining up. So catch us up where you feel like you're sitting right now in that landscape.
So I think the last time we talked, we talked about all the acquisitions we made at the end of 2020. And we talked to the investment community and the analyst community about the timing of the closing of those transactions. And I'm excited and so respectful of the team that we have at AYR that we have stayed exactly on that timeline. And I always say to you, AYR's brand, we would always hope the investment community would understand is that we say what we do and we do what we say. And so these closings, these transactions, state by state, are happening on the exact same timeline that we said. We have one more asset to close, and that's New Jersey, and that also looks to be on time. The other thing that we said that these assets, while they're great, the good news for the AYR shareholder is while we think we bought them at great prices, there's so much more upside embedded in them, because with the quality of the people we have on our team and the expertise that we have on our team, we can improve the financial systems, the operating systems, the cultivation, the retail experience, and make them even better than the assets that we bought. Today, AYR has $100 million of CapEx programs going on. What we've talked to the investment community is that expenditure is front-loaded to the first quarter. And then we'll really see the monetization, the realization, the real performance that's embedded in these assets, and the return on our CapEx and our human capital that we have applied to these assets really pay off in the second half of this year.
So one of those assets is Liberty Health. And last time you were on the Cannabis Investing Podcast, you were talking about, you know, wanting to close that deal, and we were talking about why you wanted to do that deal. I'd love to hear how that integration is going. I mean, it seems from what I can tell to be going quite well. I feel like you probably couldn't ask for a more realistic and yet bullish kind of subsequent few months after that deal closing. So yeah, if you want to share with us how that's going and how you see it going, and kind of where you see that moving forward in terms of the Florida picture.
So I said to you the last time we talked, I was and still am probably the most bullish in terms of upside potential on that particular asset. The state of Florida and the opportunity that presents, and Liberty as an asset. Now, we talked about the upside potential at Liberty. And we have an extraordinary team there. Excuse me. We have an extraordinary team that we inherited. And Darren Potter, our chief of cultivation, has done a magnificent job. We hired Mike Metaphor to really run our retail and consumer experience, and he's already had a major impact. To remind you and to your listeners, the issue in and around Liberty, it just had been lightly managed and undercapitalized for so long that when we did our due diligence, the thing that made us so excited, if we just apply the same systems, financial, operating, cultivation, same IP that we practice in our business every day, nothing more, nothing less, nothing extraordinary, no reach, just plain old air to this asset, there was tremendous upside. Think about this. In August and September of last year, Liberty was failing testing at a rate of 25%. Think about the cost of that. You produce 100, but you're only able to sell 75%. Still have all of the costs, now you just apply it against 75%. We talked about the big issue was the cultivation, the underperformance, and therefore the stores, which now there'll be 33 stores, didn't have product 7 days a week.
Yeah.
It only had product 3 days a week. So we said, if we take and partner our IP with Darren Potter, the head of cultivation, because remember I said to you, well, other people in the industry value the box, AYR values the contents of the box. And I told you the last time, I am collecting the best cultivators in this marketplace and creating an artist community of cultivators who are like-minded, who want to come together to grow the best product in the marketplace. They have all come together, the AYR cultivators with the Liberty cultivators. And already we see immediate results. The test failure has gone down to virtually zero. Productivity is up. We will be able to start putting weed in our stores 7 days a week in the very near future. That is the first pass. The second order of operation is to extend our footprint. Liberty budgeted for 42 stores by the end of the year. I'm still saying 42, but I'm not driven to 42. Our team on the ground knows that we are driven to open up many more stores by the end of the year. Remember I said to you, the reason why I felt I had to move on Liberty at the time I moved on Liberty is because I thought there was a land grab that was going to end. I feared if I didn't move now for our shareholders, that we'd be locked out of most municipalities. Because right now, I just can't see certain municipalities having 10 cannabis stores in their towns. And if I waited, I would be locked out. And so we're gonna do the 42 stores Liberty promised. But I'm pushing my team very hard to be much bigger than that.
And speaking of bigger than that, you know, the other deal that was excitingly announced was your deal in New Jersey for a Garden State dispensary. You know, that part of the states is obviously very exciting with New York coming online. How did you decide to go after Garden State? How did you pick New Jersey? What was your thought process there? And what's your goal, you know, going forward with those states coming online?
So originally, my business plan was to cluster the states that we would operate in and penetrate them deeply. I've always said, I don't need to be in all 50 states if 12 states represent 80% of the consumer wallet. A much more efficient business. So if you think about the East Coast, we were in Massachusetts. Now we're in New Jersey. We're in Pennsylvania. We're in Florida. There's some obvious holes we need. But again, it's about clustering and penetrating. And the theory, Raina, always was, while cannabis remains federally illegal, the idea of advertising nationally is impossible. So my theory has always been, let the consumer advertise for me. And as they get in their car and they travel from one state to another, they would see the AYR brand. And I know for myself, when I go into a new market and I want to buy a cup of coffee, I tend to go to the coffee store that I know and I can depend on for that consistent consumer experience. Someone leaves New Jersey, gets in the car, goes to Pennsylvania. They don't know the various sellers of cannabis stores, brands, but they know AYR. They know it from New Jersey. They know the quality that we deliver consistently. I believe they'll go to the AYR store where they feel comfortable. And if I can do that up and down the East Coast, then again, what I said, the consumer will do the interstate marketing for us while it's federally illegal and we're barred from doing it.
Yeah, there's like no interstate commerce, but there's kind of interstate commerce in terms of customers, making that happen. It's a good point. So when, we talked about this, the fact that you issued guidance for 2022, and I said, that's a move I really like. I feel like it shows a lot of moxie and belief in yourself. It's a real bet on yourself, because I feel like it's telling, right, so many analysts and investors are asking companies, share with us your guidance for the coming year. Not enough companies are doing it, but there's reason why not many companies are doing it, because of these, acquisitions that still have yet to be solidified, and for different reasons. I think what you've always brought to the marketplace, and I think you're one of the few MSOs in the States in the sector to do this, which is you're saying what you want to do, as we mentioned, backing it up, and then what you say is going to happen going forward. I think investors in the marketplace can say, yeah, we buy that. We buy you not issuing 2021 guidance because of the reasons you said, and we're going to look at 2022 guidance, which I think, talking to people in the marketplace, talking to investors, talking to analysts, it seems like AYR is always the name that comes up over and over again in terms of who are you excited about making the leap? Who are you excited about as this picture starts to develop, how they're going to develop along with it? So, I mean, it's clear from anyone who's listened to you talk that you have moxie, and that's part of what makes you a great leader. But share with us the thought process behind issuing guidance for 2022 and not 2021, and if there were people in your corner that were kind of trying to dissuade you from doing so.
In my 30 years in finance, what I've never seen is industries where people don't put out guidance. Mm. It's more typical to put out guidance than not put out guidance. And somehow the investors in this industry accept that. I don't think they'd accept it in any other industry. So would it be easy to hide behind everyone else who's not doing it and not put yourself out there and not be accountable to a number? Of course. Right? You just draft behind them. No one's doing it. There's no expectation. For whatever reason, they're exempt from doing it. And your question is, why do it? Look, if you never say anything, you can't be accountable to anything, and therefore you can't be wrong. So why take the risk? And I thought about that a lot. But you know something? You got to believe in your team. You got to believe in your culture. And you got to believe in your vision. And for me personally, I've never been a follower. We've talked about this. I live on the innovation curve. I like to think in 3D. And we have to define that space that I call 3D as heirs. And we got to be true to our ethic. And most of us have come from the finance world, and we got to do what's right. And what's right is to give guidance. So is it risky? Certainly. I am a risk taker, but I do it through calculation.
Right.
And when I look at my team and I look at our systems and I look at our ability to operate and I look at our culture and our shared vision, I thought that was a calculated risk that AYR should take. And that's why we did it.
Were people trying to dissuade you from doing so, even on your own team, even people that believe in the message, just because of, you know, kind of what the marketplace is going to do with that?
The answer is yes. You know, it's a very collaborative process. You know, it's a very open forum. And the management team, everyone, we talked about the mutual respect that we have there. And people do voice a diversity of opinion. And at the end of the day, some would say, why take that risk, John, when no one else is? And it's because I think we all agree at the end of the day, we just hold ourselves to a much higher standard. And I like that.
Speaking of a higher standard, you also talked about switching from IFRS to GAAP accounting. You know, is that kind of getting ready for the uplisting? And what are your thoughts there on kind of, I guess, what it's going to take to get to the uplisting? Is that part of what it's going to take? The companies that are taking on the more rigorous accounting practices? Talk to us about kind of where you see that going in terms of opening up the next level of that growth.
So I really pushed for this, and it was a lot of work. The market isn't expecting it. But again, if you want to lead, you want to be ready. And I don't think, Raina, anyone has a crystal ball on this legalization or any particular insight. I listen to other CEOs, and they seem very well informed, and they seem to know timing of things. And I walk away and I said, you know, it still comes down to politics. How do you handicap that? So I don't leave things to chance. I don't have a crystal ball. I'm not good at guessing, but I do like to be prepared. And so what I don't want our company, or I didn't want our company, is to be in a position to be surprised that it moved faster than we all thought, and then scramble to get ourselves ready. The other thing that I think is extremely important, which I push my team, you don't have to push them that hard. I don't want to be overly dramatic. We're all on the same wavelength here, because they understand this. They come from an investment world, many of them. When the investors who are barred from investing today, that wall of money that you and I have talked about, right now, the number of investors is so narrow. I had a very large investor of ours ask me the other day, and he said, why are these stocks so volatile? And I said, because it's the same 20 people buying it up, and it's the same 20 people selling it down. And that volatility will dampen the day the traditional investors, that wall of money, comes in. And you'll have a much broader diversity of thought. It won't be highly correlated up and down. You'll have real dispersion because they do their own work. And when they come, they will expect all of us in this industry to be GAAP, because that's the way their models work. So it's twofold. Preparing for some form of legalization that allows these traditional investors in, and to be in a position to be one of the first to uplift.
And in terms of like the volatility that you mentioned in the marketplace, do you feel like that doesn't really work itself out? Because we're seeing these, as we talked about, all these bullish developments. I mean, you can talk about AYR as an example, these bullish announcements and not really reflected in the share price. Do you attribute that to exactly that being an issue of, the uplisting and the wall of money and all of that? And once that's down, those things get worked out and it kind of becomes a bit more rational?
So I think the stocks have reacted. Okay, we were up approximately 150% last year. We're up 25 or more percent so far for this year. There was a sell-up, and people are, oh, the stocks are selling off. And then you have to remind everyone, hold on, we're up 25% for the year. Yeah. So investors did react. They bought the stocks. And now it's a quiet period.
Right.
Because the expectation is embedded in the stock. All stocks. The reality is yet to come. And so then the market starts to handicap various outcomes and then probability weight those outcomes and then present value those outcomes, because how long will it take to implement? And that's where we are today. Because I was in the hedge fund world, I have investors that call me up if the stock's down like $1 one day. And this one investor who I love, who was an investor with me in my hedge fund, who's in the stock, and many of my previous investors are in the stock, they don't realize that I have made the leap from hedge fund manager. I think they know intuitively, but when the stock's down, I think they forget, and they'll call me up and go, why is the stock down $1? And I say to them, like, I don't watch it second by second.
Yeah.
I really don't care hour by hour. I don't even care day by day. It's up 25% for the year. That's excellent. But what's really important is what we do for the rest of 21 in terms of closing our deals, which we've done the majority of, deploying our CapEx, which we've done the majority, finish off our CapEx, back-end realizations on the payoff on that CapEx, and the market will take the stock where it wants. And it will be because we maintain the reputation that we have, that we execute. So I don't want to look at it day by day. I don't want to look at it by hour. I want to look at it at the end of 21. Did we succeed? Did we do what we told the market? And I am very confident if our team just does what they're capable of doing, it will absolutely be reflected in the share price at the end of the year.
Do you feel like the plans that you have for this year are contingent upon you hitting these measures as the year progresses? Kind of in terms of doing the next, consolidative deal or the next acquisition or the next partnership? Is that dependent on how the previous acquisitions have been integrated or how things are going in general?
So I've said to the market what my strategy has always been in terms of the number of states. They know that they could easily subtract the number of states we're in versus the number of states I said we'd like to be in. So it's very easy to figure out that we have more acquisitions to do. Additionally, we raised all this capital. We're sitting with $230 million or so on our balance sheet because we thought this was the last moment in history to buy assets in this industry at this price. So in every M&A transaction, it's led by our head of strategy, Jamie Mendola. I'm on every one of those calls, involved in every one of those deals. Jamie treats me as like the senior fatso when deal gets closed and he needs a closer. Says, go on into the game, John. And I go and I do it. And I think what the market appreciates, not just our shareholders, but the people in the industry that are running independent businesses, that we are this culture. We are the transparent people. Analysts will tell us we give more information than anyone else. I'm proud of that. That filters down to the sellers. Remember, you and I talked about it. Every transaction that we do involves vendor paper, debt, equity, and cash. And when you take an acquirer's stock, we at AYR are managing your family's money. And when they think about the consideration they'll have to take in equity, the level of trust, it has to be so much higher than their consideration of debt and cash. And because we operate at the top of the industry, because we say what we do what we say, that's how we win. That's our edge. And that's why it's so important to me that we close all the deals on time, we spend our CapEx appropriately, our CapEx projects come to the market on time, and we hit our numbers. Because as important as it is to our shareholders, it's as equally as important in my mind to the assets we want to buy when they have a choice to go with AYR or someone else.
Speaking of that, kind of like what you're building in the marketplace and what you represent, and you know, so much of people say what they represent is in their brand or in their name. Last time we talked, you guys had a ticker change, and since the last time we talked, you guys have had a name change. Was that always in the planning? Was that always planned, or was that kind of something that happened? I was wondering if it had to do with the ticker change, or where did that come from, the name change?
So it's funny, when you talk to patent copyright lawyers and you ask for a certain name, every name seems to be taken. And if you notice, I don't know in Israel if they run pharmaceutical advertising constantly, but every new drug that comes to the market has a name that doesn't even exist in the English language. I don't know if the word Google existed in the English language beforehand.
Yeah.
And so because every name's taken, people are making up names. So we originally asked for AYR Wellness. We were told we couldn't have it. And so we had to settle on AYR strategy. And then over time, we kept talking and to the lawyers, and they did more work. And it turns out that AYR Wellness was available. And when you think about AYR, what we've always said, we wanted to be at the cross section of wonder and wellness. It's such a better representation of who the company is. And so, of course, we grabbed it.
Gotcha. Interesting. And so it's just synchronicity that the ticker change was with a W?
You teased me about it was more than just a W, and today, I don't know why, you're just smiling. A lot of people seem to get a kick out of that symbol, right? WF. I'm not sure how that happened.
Fair enough. Well, speaking of names, I don't know if you know this, but do you know your nickname on social media? Or on Twitter at the very least? You know, people call you Sandman?
You know, growing up, people call me that. And they
Is
used
that,
to sing a song that I guess was big in like the 40s.
yeah,
Mr. Sandman.
yeah.
Yeah,
There's
that's fine. I
great.
didn't know
All right, I was wondering if you had a sense of that or if you enjoyed it, but it sounds like you kind of do, you know, from childhood.
that. Yeah,
Yeah. Okay. Very
yeah,
good.
that's great.
What's that?
That's great. I had no idea.
Okay, good. So the other thing that I wanted to ask you about, and we talked a little bit about this last time, but I feel like it's come up again in the sector, the notion of what's good dilution and the necessity of having some dilution, especially in, you know, what we can call an emerging market or a developing market or whatever this industry is that we're in. What's your theory about, you know, when it's good to take on debt in terms of an acquisition? I mean, you've talked about now having cash on the books. How do you go about accumulating that cash, and what is it when the deal is right and you see an asset that you want to take, and that's kind of how you set it? Or do you have that set up in case that you want to do a deal? How do you think about, how do you strategize there?
My basic strategy on acquisition, and the reason why I raised so much money, is my belief in the 5 years from now, I don't want to be in a position to say to myself and my team, we were there and we could have bought anything. You've heard people say this. I was there, I should have bought more. The opportunity, I was there cellular, I was there cable, I was there internet, and it was right in front of my face, and I just didn't do enough. And so before we went to raise the money, I talked to our team about that. These multiples, I believe strongly in 5 years, when this is all federally legal, and this is one of the biggest CPG industries in the world, because I've never seen consumer appetite like this. I do believe in the plant. I think it's nature's medicine. Some people think recreational will be bigger. I think the medical aspects will far exceed, because I believe in this plant. So to be here now, buying 6 and 7 multiples, when I think these will trade at 25 or more, will probably overshoot at some point. When that wall of money comes in, there's not a lot of liquidity in these stocks, and all that money is going to have to get through a very tight sieve, because this is a great industry, and the consumer demand, as I said, is endless. So did I lever up my balance sheet to buy as many 6 multiples and 7 multiples? And again, in my own mind, I'm actually buying them at a discount to that, because there hasn't been, as I said earlier, an asset we bought that the AYR team couldn't improve. Well, I did a great job with limited resources, limited personnel, limited capital, limited expertise. Everything we bought is already on our systems. We've already integrated all the systems. You know how heroic that is? We already have total control of these businesses. It happened instantaneously. So, yes, I believe this is a once-in-a-lifetime moment. I think as long as you can find world-class assets that have dominant positions, that have great brands in their local market, we should continue to buy them and build out on our strategy.
You've also talked about kind of, you know, the core of what AYR is the team. And I feel like the first time you came on, you were talking about how it's so important to you know, procure talent. And that's really one of the most essential parts of building a team. Would you say the way that you look at talent, or the way that you see if somebody works for their team or fits in with your ethos and strategy, do you feel like that's dependent on previous experience and looking how they've handled previous situations? Is it a personal intuition? Is it when you meet them, you kind of know based on the conversation that you have? Or is it a series of those things? How do you how do you start building that team?
I think I said this to you the first time. If I didn't, I learned a lot of lessons in life about hiring. I've always been a lover of talent. I've said to you, for me, talent is free. It's mediocrity that's expensive. I'm only going to have a limited number of seats at the management table. So I assign an opportunity cost to each seat. And if you're not the best in your lane, in your area of expertise, you're expensive. But if you're the best and have the right culture, we've talked about this. You can't have just a brilliant person in a seat that's going to offend everyone else, because I talk about the power of people. If I have 10 seats, they got to be the best industry leaders in what they do, but also have the chemistry and the culture and the mutual respect. So we play this power of people game. If I get that right, I learned, then it's the power of 20, it's not 10. Because we talked about this, the lessons I learned in law school, the Socratic method. If you push me, Raina, in the meeting in a respectful way to get me to think in a way I can get to myself, I thank you, I appreciate it. So the secret I learned in life is first to define exactly the role I'm hiring for. And then think about the type of talent or person that's best suited to do that function. So I used to make a mistake. Someone walks in, they seem great. I didn't really define the spot, and I was putting a square peg in a round hole. And you don't know me, when I was younger, that wasn't good. But today, I don't really even have to manage, because I define the position, and it's a round hole. And I spend the time screening for the right talent who has those cultural aspects, the mutual respect, and the brilliance. And that person is also a round peg. And if you hire the best and you have a shared vision, you want to give them as much room to grow and develop and own their own business. And then you only have to lightly manage them. So that's the secret. It's all about talent, but it's about how you find the talent for the opportunity set that you're looking to fill.
Have you come into contact with defining a role, and even as you get better and better at defining that role and crystallizing those thoughts, does somebody come in and kind of change that up for you? Does that happen also?
Well, people grow, right? That's the thing about AYR is everyone, this is the good and bad. Everyone buys into the culture of the vision. Everyone feels they're a part of the culture of excellence. And everyone feels they own equity, because they do. And so they want to stray from their lanes, because I have everyone in their lane of expertise, because they want to help in any way to make this a great company. I love that. I respect that. But I am very strict about keeping everyone in their lane and not distracting them from their genius. Now, there's something else I do, and I've done in the past. I love offering people, certain people, who I find extremely talented and very high quality people who have had a mistake in their life, and giving them a second opportunity. And what I have found, when you do that for someone, the loyalty and the hard work is irreplaceable. So in the past, have I built the home of the broken toys? For sure. But it's been so amazingly rewarding that those are the things that drive me to keep working.
Yeah. Kind of speaking of building a team and building a business, you know, we talk a lot on the podcast. I'm sure you guys spend time thinking about how the evolution of the industry as descheduling, legalization, as it develops more and more. Do you see the MSOs, you know, that I assume that you feel like by the end of this year, if you don't already think of yourself as, you know, one of the top 5, I think the marketplace will kind of consider you one of them as the year develops, it seems to me, if everything plays out. Do you see kind of the top MSOs keeping at the top of the hierarchy in the US landscape, even as descheduling comes up, even as legalization opens up, even when we're talking about years from now, interstate commerce opening up? Do you see that as being able to remain at the top of that, at the top of the pyramid, kind of?
You know, in some days, Raina, I actually don't want legalization to happen too quickly, because access to capital today is super restricted to a handful of top MSOs. And we talked about this the last time in Cannabis 2.0, there's a small cohort that could raise the kind of money that AYR was able to raise. And a few of our competitors were able to raise. And since I still want to acquire, I have an edge because I have $230 million on my balance sheet, and I can move relatively quickly and get so far ahead of those that fall outside of the top 5 who don't have that access to capital, that I'm not praying every day when I go to bed that it's federally legal and everyone has equal access to capital at this point. It will happen. And when capital gets equalized, then the opportunity set will also get equalized. And we've worked very, very hard to be in the top of that pack. And I want to accelerate that.
Very good. John, anything you want to leave listeners, viewers with about AYR, about what we should be paying attention to in the market, about things that we're not looking at that we should be looking at? Anything you want to leave us with?
Well, I would invite your listeners to watch over the next several months as we finish off our CapEx program and really, really start to lever up the companies we bought, and they start to perform in the way we expect them to in the second half of the year. So I am as excited about AYR today and the opportunities that I see over the next couple of months. We've really built out our management team, our operating teams. As I said, we've collected and attracted great cultivators, great operators. The thing that drives me every day is the way we've been able to talk to our culture and have it permeate down to the 1,400th person. It doesn't stop at the top 10 or so people. And I like that the members of our team are on the next layer and the next layer, preach the same vision and culture to their teammates, and then they preach it down. And I think that is super rewarding.
Let me ask you this, and I'll end with this. Is there a feeling at AYR, I mean, I imagine that there would be, of what's happening in the marketplace, of kind of the growth that's happening? or is that talked about as kind of, sorry if this is an obvious question, but it just seems to me that you guys are kind of on the cusp of moving from one part of the marketplace to the other. Is that something that's felt and talked about?
Yes, all the time. But having said that, we were a small 2-state operator. Right now, we felt the same way. That's the way we feel internally, that we should be the best. We will be the best. We will lead this industry. And that's our culture.
Perfect ending. John, always a pleasure. I look forward to the 5-Pete. I hope we have more good news to share. But always thank you for joining us. It's really always great to catch up. It's always great to talk to you. So thank you.
Thank you. I enjoy this so much. Talk soon.